Okay.
Hey, how are you? Hang on for 1 second. I needed to run to the supply store, so I'm just checking out.
All right.
Sorry, it's been a doozy of a morning. I have a plumber at my house.
All right.
Um, I have a leaky sink in the tub, and it started as a drip, and now it's a lot more than a drip, and so he
Uh,
needed me to run while he was doing work, so that's what it turned into. So I'm not stationary, but I am here.
Very good. Well, thank you.
It,
Yeah.
and so that led to purchasing property, and now we've had property for 2 years now. So now that we've seen the full tax cycle, we're like, bring us more property, all the things we get to write off and how it helps with the W-2 and all that kind of stuff. So
Oh, I got
um that's kind of my why. Well, at least
you.
what led me here or how
Yeah.
I got here.
Yes, I understand. And are you a sub two student or Gator or
I'm
well,
a gator.
you're
I'm a gator.
Gator. Very
Yep.
good. Okay. So how long have you been in Gator and how has your experience been so far?
Been in Gator 5 months and it's been great. I really took the first 2 months, 2.5 months to get the information digested,
Mhm.
and then kind of went from there into networking and just talking with people and working up the nerve to do a PML deal. And then last month I did 4 deals.
Oh, very good. Congratulations.
So
Very
no, I
good.
appreciate that. So now I'm like, okay, now that I feel like I at least have experienced some of the rhythms of it, and now I want to see it full cycle where not only do I fund it, but the money comes back,
Yeah,
right?
that's the most important part. Yes.
Yeah, so
Goes
that's the
back.
cycle. That's kind of where I'm at. One of my PMLs is scheduled to be back at the end of the month.
Okay.
I mean, it should have been back this week, but there's some delays, but that's why you have the, fees. And so, hopefully that person's waiting to be paid out from a sale to pay me back out.
Very
So
good.
it's a chain kind of reaction
Yeah.
from that. So you pray that the sale actually happens as you kind of hit each benchmark. You're more encouraged, but
Yeah. Yeah.
you know how that part goes.
I do, yes. And you can lose a lot of money in real estate, not to but frighten you, because I
No,
have.
I
I've
mean I
been.
know that that's a very real thing for sure.
Yeah, yeah. And that's why I wrote this book, Cautionary Tales from Real Estate Investing from my first experience. This was
Okay,
back in 2003. I started my real estate journey in
okay,
multi-families and made a whole bunch of mistakes. Got knocked out of the game, in fact, in 2009. I was licking my wounds for quite some time. Didn't get back into real estate until 2017. I
okay.
got my license as a real estate investor. I thought I'll do the safer thing and do retail, but my heart wasn't in that. My heart's in investing. And so
Yep.
recently I got into the large multifamilies because, like all other niches in real estate, you don't need your own money. You just have to find the money, and that's with networking. So to me,
Yep.
it made sense to go large and it's more scalable, going large, and there's more rewards than playing around with single families. So
Yep.
that's where I'm at.
Yep.
Opportunities for you to help me would be if you come across anyone in your network who has money to deploy, um, then you can bring them along to a Zoom call that I would invite you to, where we
Okay.
do the offering memorandum and show you the deal, show the breakdown and everything. And if they throw their money in the pot and we get it to closing, then you will get paid as a connector.
Okay.
Um, Also, there's opportunities for EMD. This starts anywhere from $100,000 all the way up to 1 million, because we're talking about acquisitions price of 10 million to 100 million and beyond. So we're playing the big game here, you know? So
Well, you know what? It's interesting you say that because, like, when I started to think about what I wanted to do in my Gator journey, I want to get into ultimately funding for a small group of people
yeah.
and funding, luxury flips, things like that that will have high returns. But even I had a Zoom with a gentleman who's getting more into the commercial space of trying to acquire hotels.
Oh, right. Okay. Very good.
And so, he was talking something very similar in the sense of, needing um, large amounts of EMD and things like that. And I was like, well, that kind of fits within, my wheelhouse. I want to have some fix and flippers that I can do some things with. I kind of have some other um, borrowers in different capacities and more of the commercial space and kind of go from there. But I mean, there are people within my network. I have, access to a pretty good amount of capital. Um,
Oh,
and
very,
so really it's just about relationships and
yeah.
building from there to figure out, what really works and makes sense.
Yeah, so certainly, Kira, if you like, I can send when I do have an OM, an offering memorandum, I can send you an email and you can come along and bring anyone who's interested. And as I say, there's no obligation, but it gives
Right.
you an opportunity if you would like, you know. And
Now, how many buildings, like, what, like, I guess, do you have a buy box in terms of your multifamilies, like in terms of doors,
yeah,
that you're looking for?
yeah, that's right. Be over 100 doors
Okay.
maybe it's a complex. It's not a portfolio. Okay,
Mhm.
it's purpose-built apartments. We like a
Okay.
C-class asset in a B location, B-class
Okay.
location. We like the at or above the cap rate for the market that it's in. And there needs to be occupancy about 80 to 95%. So, because what we do with the vacancies is obviously renovate those units and bring it up to full market value. This is the stabilizing part of the asset, and that adds the value in right away. And then we roll the improvements as the vacancies occur through the 3 to 5 year time periods. After 3 or 5 years, we sell a project and everybody gets paid their equity share. There's opportunities to get paid at closing, as I say, and opportunities for quarterly distributions and then a share in the equity, depending on what role you play. I do have a video, a YouTube channel where I'm starting to do a series on multifamily, and
Okay.
I'm going to write a book as well about it. It should come out later this year.
Oh,
Uh,
that's awesome.
yeah, so I'm looking to build my network up in that regard and help people make some serious money because I see so many messing around with single family homes and you get a little bit of pay and it's just not worth the effort, you know, sometimes. And
Yeah.
it's, the risk to reward ratio is very small when you're playing in that pond. It's much better to play in the bigger stuff, you know?
Well, let me ask you this as well. Like, what are you finding? Because in terms of what I see and hear locally, I'm in Pennsylvania, I'm about an hour from New York City. So, multi-families are, in a battle in terms of keeping the occupancy. Actually, in Pennsylvania, I'm driving past downtown and they're throwing up buildings left and right. And I have to imagine there's easily 100 to 200, apartments being built in this one little one that I went past. And so it seems like, people are trying to get back into producing
Mm.
apartment buildings, but you hear things in terms of the news or in the, real estate talk that multifamilies are in a struggle. So, I mean, I have to imagine a big part of is the location you choose when you're
Yeah.
acquiring assets.
And that's true for any real estate. Certainly, you've got to do due diligence. You recognize the deal when it is. We only get one or two of these a year, but
Okay.
then the reward is high. Um, and you're right. The way the economy is going right now, there's plenty of that's when it's good for the investor because you can pick up some good deals, or the number of good deals increases as the economy gets worse,
Right.
especially with inflation. Because here's the truth, everybody needs a roof over their head, right? So
No, for sure.
one
For
one
sure.
way or not. And a lot of people, are struggling right now. They might be facing foreclosure or what have you. They're moving to apartments. They haven't got much choice. They still got to live somewhere. So,
Now, I'm assuming you have property management in places that you go,
oh yes, yes, we
or you
use
have your own team.
yeah, we use the best in the current market, the one with the best reputation, because that's
Okay.
part of the value add in getting it up and running. So um, the management of the uh, complex that we buy is often at fault. So we change the management and use the very best in that area with a good reputation that brings
Okay.
in the value and stabilizes it and gets it fully occupied. So,
Okay.
yeah. So it's all professionally done with all the attorneys and everything else because this is at the top of the game. We're talking about a multi-million dollar assets that professionally managed at the highest level as a passive
Gotcha.
investor. Yeah.
Now, how do you bring in lenders like myself? So, I mean, you walked me through a little bit of it, but do you can come in at increments of 50K, for example, or is it you can bring whatever you want to bring?
We look for mainly accredited investors. We do a 506c. The 506b we do occasionally, which is unaccredited. It would be at least 50K chunks because we're talking about tens of millions of dollars. So it
Yes.
doesn't make sense for any less. You can gator wrestle with others, form an LLC, and become a partner that way as an LLC, where
Mm-hmm.
as an investor, then you'll get a portion of the rewards, compensation.
Gotcha.
Yeah,
Gotcha. No,
yeah,
that makes sense.
yeah. Mm. It's a lot of money, when you're
Oh,
trying
believe me, I
to.
get it.
Yeah.
I get it. I mean, like to me, like I just put in 83K to be a PMP on a co-living, so it's in the same kind of wheelhouse.
Yeah, yeah. You stretch it to 100, you could be a limited partner and get quarterly distributions and a share in the equity at the end of the project. So it's a very rich reward. Yeah.
No, I definitely that I definitely have interest in that for sure.
Yeah, because it gives
Now,
you
have you
income flow throughout the whole project, and then you get a share in the equity. And usually, we can double the value of the building in 3 to 5 years, and that's millions of dollars that get distributed out, according to what share you have. So,
right,
yeah.
right. So here's a question. You had mentioned you do one or two of these deals per year. Have you reached your two deal quota for the year thus far?
No, as I said at the beginning of the call, if you remember, I've just recently changed into this niche. Okay.
Okay, got it.
Yeah, yeah. So, no, that's my goal that I've written down, and it's not hard to do if you keep on track and building up your team and your network and things like that. So that's the main work is the capital raise.
Okay.
Yeah.
No, I would love to be considered as you come upon opportunities and to be able to hop on the call and really kind of dive deep into it.
Yeah, absolutely. Yeah, and I would encourage you to subscribe to my YouTube channel. We can keep in contact that way. And
Okay.
it's where I'm doing a series of multifamily, as I say, and you can learn more about it that way. It's entirely
Okay.
free, way of learning and networking with others of like-minded in that niche.
No,
Uh,
for sure. For
yeah.
sure.
All right. If you like, I can text that to you, uh, that YouTube link.
Yes, that would be helpful.
Okay, I'll do that, Kia, because I know you're driving. But it's been a real pleasure talking to you. Don't
You
hesitate to, yeah, book another call with me at some future date, if you like, or ask me questions anytime. I'll be happy to
okay?
keep in contact with you and see you on another Zoom call, sometime.
Yes. No, that would be ideal for
Yeah,
sure. This
that's,
really excites me, so I'm definitely gonna
mm,
subscribe to your YouTube channel, do as much education as I can so that then I can really ask intelligent questions when we circle back around again.
yes, absolutely. Well, you have a wonderful day, Kia, and I wish you well in your business. Okay. All right.
Thank you.
Bye for
Same to
now.
you.